Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, April 15, 2009. We begin with some housing data from the UK, where the RICS house price balance showed the net balance of surveyors reporting falling rather than rising prices recorded a modest improvement in March, but at 73.1%, it remains deeply in negative territory. The latest reading was, however, the best outcome since February of 2008. A second release, however, showed that housing prices for February were down 12.3% on the year. The pound-dollar pair rose above $1.50 for the first time since January, following the better-than-expected RICS housing data, though the rise in the pair came about at the open of the European session. Today's move pushes above the resistance at 1.4950. The pound has seen a rally since the beginning of March that was bolstered by better-than-expected manufacturing and services data. The rally has a chance of continuing if this break of resistance is matched by improved sentiment around the housing market. The euro-pound pair slid 100 pips, falling from the 0.89 level to trade below the 0.88 level in the New York session. That puts the pair at its lowest level since February 25th. Where the UK seems to be improving as a result of the measures taken by its central bank, the Eurozone is still showing signs of a deepening recession, with the ECB's response slower and more gradual. That disconnect is responsible for a 600 pip rally the pound has seen against the euro since the beginning of April. German wholesale prices fell 0.9% in February in the Eurozone in Germany, a sharper decline than was expected by economists. On the year, prices were down 8%, which is the steepest decline in 22 years. Last summer, prices peaked at an annual rate of 9.9%, so the recent price drops come as a period of disinflation. However, some policymakers are concerned that a period of disinflation, if coupled with a protracted recession, could lead to deflation, which impacts businesses and asset prices. That worry can force the ECB to lower interest rates from its current 1.25%, though there is a difference of opinion if the rate should fall below 1%. In the US, consumer prices slid 0.1% on the month in March, and on the year, prices were down 0.4%, the first time since 1955 that the annual rate was negative. Still, the core rates for both the monthly and annual rates were above expectations and show that lower prices come as a result of energy and energy-related products. That can calm concerns about deflation in the US economy, as the drop in prices does not seem to be broad-based. The New York Empire Manufacturing Index showed a marked improvement in April, climbing 24 points from its March record low to post a reading of negative 14.7. New orders shot up 41 points to a reading just below zero, suggesting firms and companies have run down excess inventory and are ready to start ordering again. That should help to ease the pressure on manufacturers, which saw industrial production fall another 1.5% in March, matching the decline seen in February. It's the fifth month in a row that production has been negative, and the figure was worse than expectations. The capacity utilization rate fell to 69.3%, which is the lowest level since records began in 1967. The decline was broad-based in the manufacturing sector, and output in oil and gas well drilling was also down. Still, as we mentioned before, if firms are close to running down their excess stockpiles, there's a chance we may start to see a rebound in industrial production in the months ahead. Builder confidence in the market for newly built single-family homes rose 5 points in April to the highest level since October 2008, according to the latest National Association of Home Builders Housing Market Index. The encouraging sign shows buyers responding to much improved affordability measures, including low home prices, extremely favorable mortgage rates, and the introduction of the $8,000 first-time buyer tax credit. The euro-dollar pair extended its losses from yesterday, declining to a session low near 1.3150, following a sharp 80 pip slide prior to the New York Open. That pairs the gains for the euro seen to start the week, when thin liquidity may have pushed the pair up to test the 1.3360 area. The pair is caught in a period of consolidation, with support near the 1.31 area and a downward sloping line of support forming perhaps a descending triangle pattern. The dollar-yen pair, which saw a rather steep fall yesterday, extended its decline to the 98.15 level in overnight trading, but rebounded during the European session. Stocks opened up higher in Europe, but fell to close in the red, while in the US, the Dow index hovered in positive territory, while the NASDAQ was lower. That gave RICS sentiment little direction, though the New York session saw the pair pare some of its gains. Today's high near 99.65 was a support level that is now acting as resistance. In a look at the US dollar-Canadian dollar pair, where the loonie thrives on risk appetite, the greenback slid 150 pips to test the 1.20 area. That extends its losses versus the loonie for the week and is now about 400 pips lower than it was last Tuesday when the pair tested the 1.2460 area. Tonight, look for manufacturing data from New Zealand and retail sales data from the UK. Overnight, Switzerland releases its producer prices, and the Eurozone posts its final version of CPI along with its industrial production. Tomorrow, the US will release data on building permits, housing starts, weekly jobless claims, and will also put out the Philadelphia Manufacturing Index. Canada, meanwhile, releases its report on manufacturing sales. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.